To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Independence Day Eve here on the Financial Exchange. It's a jobs Thursday for some reason on the Financial Exchange. It feels a lot like a Friday today. Speaker Johnson still wrangling votes in the House to try and get this big, beautiful bill act across the finish line. He was hoping to have a vote by 8 a.m. That apparently has not occurred. The vote that they had at the wee hours of the morning was to bring this to the floor for a vote. We will see when or if that occurs sometime in the next 2 hours, and be sure to let you know if it does. In the meantime, at 8:30 a.m. this morning, we had a few different reports on the state of the labor market. One being the big monthly jobs report. That's what's getting all the headlines. We also saw weekly jobless claims come out at the same time. Usually they're separated by a day. This week is special. Let's start right off with the Bureau of Labor Statistics jobs report, Mark. And before we get there, I think it might be helpful just to set the groundwork for what you and I think was the dominant narrative about the labor market and economic growth generally, but the labor market especially, because I think the dominant economic narrative was slowdown. Am I assuming too much?
There were concerns.
Yeah.
Yeah. Other reports had suggested some weakening, but it was from feverish levels. You have to keep that in mind. The economy was overheating, so it could be normal. We talked about this yesterday too. More of a normalization than a weakening. That appears to be the case.
So evidence that there was some weakening going on. The unemployment rate had slowly ticked up a bit. I know it read at 4.2% for the last several months, but it really went from like 4.15 to 4.25, a slight increase in the unemployment rate. The number of jobs created was fine, but not stellar, and there were several revisions downward of previously reported data. The jobless claims number, we're not getting to a exorbitantly high level, but the number of people still sitting on the unemployment claims and not finding a new job, we're growing, and the overall state of churn in the labor market has been comparatively low, to say the last few years. And so the narrative that I think was dominating markets was keep an eye on the next few jobs reports, because you could swing towards some really low numbers of job creation based on what we're hearing about the labor market. Today completely contradicted that. It showed the resilience of the U.S. labor market, of employers, of maybe some of that employment hoarding.
Did we say what happened yet?
No, we didn't.
Oh, so you're building
I'm
suspense.
building it all up, Mark.
Oh.
You didn't get the suspense, apparently.
I was turned off.
147,000 jobs were created in the month of June, according to the survey done by the BLS. The unemployment rate, which had been sitting at 4.2, actually dropped down to 4.1%. I believe the last month's data also got revised upwards, if I'm not mistaken. So you had the previous month looking actually better than it was initially reported here. And so overall, what you're left sitting here with is a job market that is a little bit confusing given what everybody's been saying, but one that is resilient and is showing some strength here when everyone is expecting it to weaken a little bit, which I take as good news for American workers, but challenges a whole bunch of things that have also been dominating, such as the Fed lowering rates. So let's start with the report itself. I mentioned the headline: 147,000 jobs created. Unemployment rate dipped. Anything else in the report actually catch your eyes here?
I mean, is it worth pointing out that the rate dipped? So the rate is a rate. So when you hear rate, think fraction, something on top, something on the bottom. The thing on the bottom is the labor force. That shrunk by a little bit. The thing on top is the number of unemployed people. That shrunk by more. So when the top went down by more than the bottom, you get a lower ratio. That's how you get to that point, if you've ever wondered. And these are just estimates. Like you said, May and April. Now I'm going to switch from household. We were just talking about the household survey to the establishment survey, which you set up 147K. Again, this is of businesses. That plus 16,000 new jobs in May and April. That is just an estimate. So that's 147 plus or minus 136,000 with 90% confidence. What does that mean? In actuality,
it means it's a damn guess.
A sample. It's a sample.
Yep.
And samples can be off for a couple reasons. One is just statistical. They don't go to every employer in the country.
Nope.
They go to about 120,000, covering a little over 500,000 individual locations. Similarly, the household survey, they only go to 60,000 households. Those are the limits of our survey capabilities, given the amount of money we spend on it. So pretty sure that some jobs were added in June.
Yeah.
But that could always be revised to something much lower.
It could. Speaking of those revisions, so again, to Mark's point, the way this works, when we're talking about that 147,000 jobs created, they go out to how many businesses, did you say?
It's about 120,000 or so.
Okay, so about 120,000 businesses, and they pepper them with questions. Did you hire anybody? Did you fire anybody?
Well, they
What
send
were
them
the
a
wages?
survey, and then they have to mail it back, and some don't, which is why you get measurement error.
And so, that portion that doesn't mail it back, or maybe doesn't mail it back immediately, immediately.
Or spills coffee on it or something. Like, seriously.
Whole building burns down. Any number of things.
I wasn't thinking that dramatic, but
cause them to not return these surveys or not return them on time. And so we did get revisions for April and May based on more of those surveys coming in. And what we saw was that, in fact, with those revisions, the estimates are now 16,000 jobs higher for the months of April and May than were previously reported. And who knows, like to Mark's point, this all could get revised downwards later. But what I keep harping on is that this seems to contradict the dominant narrative that was in markets before, which is Federal Reserve, you're behind the eight ball. You need to cut because the economy, this isn't what President Trump was saying, but what others have been saying, the economy is showing underlying signs of weakness. We're not seeing it yet in the headline data, but it's going to show up eventually. And so cut. We're behind the eight ball. We need to cut. And Fed didn't. They've resisted that temptation. And this report is going to put a bit of a question mark on the next move.
Backing up a little bit, unemployment in the threes is exceptional. It's actually worrisome. That's unnaturally low. We've been there only a couple times in the history of record keeping of this stuff. Unemployment in the fours or fives is good, assuming it's not going up really fast. In the fours and plateauing or stable, even in the fives and plateauing and stable is probably about where the economy should be. Anything above, say, the fives, you're probably looking at something problematic, absent a big shift in the composition of the labor force that pushes up the so-called natural rate, the rate at which inflation is more or less steady. So anything in the fours or fives is fine, assuming you're not on the way up to something potentially problematic.
And that trend in unemployment is what people oftentimes look at.
They're like mini trends.
Right.
Because there is no long-term I'm sorry, I'm being a little bit. Go ahead, finish what you're saying.
No, you're fine. But the analysis that's been done is once unemployment starts trending in a certain direction upwards, specifically,
there's a little bit of persistence.
There tends to be persistence, although that broke a little bit last year. In terms of where the jobs showed up, 73,000 jobs created in June in government employment, where specifically state government increased by 47,000, mostly in education. Local government and education up 23,000, whereas federal employment, no surprise here, down 7,000. So in spite of the fact that federal government is cutting jobs still, state and local employment picking up the slack there and continuing hiring. Healthcare continuing to add 39,000 jobs in the month of June, compared to 43,000 over the prior 12 months, so about on target with average. Social assistance employment trended up 19,000, and little changes in a whole bunch of other fields, including mining, quarrying, oil and gas, construction, manufacturing, wholesale trade, retail trade, transportation, etc. The unemployment rate.
What about manufacturing? Because that's a big political focus.
Flat.
Did you happen to see? We lost, 7K jobs there last month?
I think so.
Lost another 7K, I think.
Yep.
This month, it just shows how hard it is
to
goose employment in a targeted way.
Yep. So no real move in manufacturing. Let's take a quick break. I want to come back to this and discuss this a little bit more, but let's take a quick break. I want to cover two things next. One would be that drop in unemployment. We've been talking about the labor force and what could be happening there. There's a lot of theories. Let's talk about that and the Federal Reserve's reaction to this type of labor market report next on the Financial Exchange.
Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. It's a effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
See you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly, so don't delay. Visit DAV5K.Boston today and reserve your spot or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at DAV5K.Boston.
Mark, as you know, there is a question and answer section in the results that get posted every month from the Bureau of Labor Statistics. And I think one of the questions is potentially relevant today. Are undocumented immigrants counted in the surveys? And this is a quote from the survey itself. It is likely that both surveys include at least some undocumented immigrants. However, neither the establishment nor the household survey is designed to identify the legal status of workers. Therefore, it is not possible to determine how many are counted in either survey. The establishment survey does not collect data on the legal status of workers. The household survey does include questions which identify the foreign and native born, but it does not include questions about the legal status of the foreign born. So if you're wondering, hey, this survey from 3 years ago, did it include a group of people who weren't of legal status working in the country? The answer is probably yes. It probably still does today because you're asking employers and employees about whether or not they are working. The question that I have, why I'm asking this question, is we saw a drop in the unemployment rate, Mark, and primarily I believe that was from a shrinking size of the labor force. Am I correct?
That was the dominant force. Yeah.
It wasn't, again, to Mark's point, it's a fraction. You can have the unemployment rate drop because a whole bunch of new people got jobs. That partly happened today, but the bigger drop in the unemployment rate came from a smaller labor force itself, meaning a smaller group of people actually pursuing work. Right?
Both the numerator and the denominator went down. The numerator went down by more.
Yeah. So I guess what I conclude here is we have, in this survey at least, this month, a shrinking labor force. This data is all seasonally adjusted, so it accounts for the fact that, there's a bunch of new college grads that may have entered the labor force. But we have this shrinking labor force, at least in this 1 month. And, 1 month does not make a trend. But if we assume for a moment that might continue, where could it be coming from? We talk obviously a lot about immigration. We talk a lot about baby boomers and retirees. Is there a compelling case that, I guess I've been talking about this now for a few weeks, is there a path where this labor market in fact turns out to be the exact opposite of what everyone's been predicting, which is loosening, cause for lower rates, potential recession? I'm seeing a path here where we could get to a pretty tight labor market that could actually be inflationary due to what we're seeing here. Maybe not tomorrow, but I'm starting to see this path developing.
That's plausible to me. I don't really know. It's not really my area, to tell you the truth. I'm just a generalist.
Sure.
So there are people, I've read stuff by people who do specialize in labor in the labor market, and they are concerned about the supply of new workers from immigration being constricted by present policies. Mm-hmm. So yes, that's certainly plausible. In the long run, that will also translate into fewer hours worked, and thus lower growth, lower potential growth, lower actual. Well, yeah, it's it's a mathematical sort of certainty.
Yep.
All else equal, a very important qualifier. So yeah, Mike, that's plausible and something worth keeping an eye on.
I'm just always interested in when everyone's talking about something going in one direction, I just get suspicious. And that's what everybody's been talking about for the last few weeks is unemployment's going to go up. Look out for the unemployment claims. They're going to spike. We're going to see unemployment click up. We're going to see a slowing number of jobs created because 147,000, right? That's above what you would need to just keep the labor force where it is or about where you would need it to keep the labor force where it is. And I'm just very intrigued by this idea that, look, inflation ain't dead. We've got tariffs, we've got tax cuts, and now we have potentially a shrinking labor force that all contribute to potentially higher demand for workers and just a tightening of conditions.
Underlying inflation, trend inflation, is definitely not dead. We can measure that. It's just a question of what direction it goes in, which is not a very helpful thing to say. Most measures that you would put into your little model, if you're a researcher, to account for how much slack there is or isn't in the economy, point to not a lot of slack. GDP is growing, seemingly, according to things like the Atlanta Fed's GDP Now, and there are others at or above trend. So there's very little slack probably there. Industrial production is still high. Capacity utilization, not so high, but it hasn't been throughout this cycle. Vacancies to unemployed people, the JOLTS report that we talk about from time to time, that ratio is still way above where it used to be in the 2010s and in prior decades. So there are a lot of things that point to elevated core, and I'm not using it in the ex-food and energy sense. I'm talking about trend inflation. There are a lot of things that point to elevated underlying or core or trend. Those all mean the same thing. Inflation. On top of that, inflation expectations have gone up, consumer expectations anyway, by some surveys a lot more than others. So, yeah, this is why the Fed is standing pat, Mike. It's not that they're digging their heels in because they want to irritate the president.
Agreed. I feel like I'm being a bit negative. This is a really good jobs report. I want to be pretty clear about that.
Yeah, labor market's strong, yeah.
Bunch of jobs were created. Unemployment rate dropped. We have nothing but really good news to say here. What it means bad news for is the president's wishes to get lower interest rates. A day ago, there was about a 1 in 4 chance of the Fed cutting rates, according to the Chicago Mercantile Exchange, at their next meeting. The July 30th meeting, is that where we are? Yeah, July 30th meeting, month, 1 in 4. Today, about 1 in 20 chance.
But this ain't bad. That's like saying, well, it's bad news. I don't get to enjoy hospital food because I don't have cancer. Like this is a good thing.
This is a good thing. It is. You cut interest rates because you're concerned about the direction
weakening
the economy
demand
is going.
And that still may be the case, by the way, as you said in the last segment, very wisely. I think there's.
Oh wow. They're whipping out the compliments the day before July 4th, Mark.
Well, and my semi-annual employee review is coming up too.
That's true. Yeah.
We don't know. This could get revised down. Other measures could point in a different direction. Everything could fall apart. Tariffs could. Isn't there? There are so many of these deadlines on tariffs running concurrently.
Yes,
I've lost track.
Me too.
But many of them could get implemented over the next few weeks, so the wheels could fall off the economy as a result of that. And the Fed may feel like easing is the right thing to do.
Yep, still could. But I think the narrative for today is American economy showing resiliency.
Snapshot point in time, absolutely, Mike.
Showing
How could you come to
resiliency.
any other conclusion?
That's the only conclusion you can come to, whether it's this report, the weekly jobless claims confirmed the same thing. You've got interest rates up, stocks up. This is a day of American economy is resilient as we head into that July 4th holiday.
Absolutely.
We're going to take a quick break here. When we come back, Ben's going to give us a full market recap, including what we were seeing on those interest rates, because it is a fairly substantial move to the upside on yields. Quick break. We'll be back with that next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are on the rise almost across the board here as traders continue to digest this morning's monthly jobs report that came in higher than expected. Non-farm payrolls increased to seasonally adjusted 147,000 for the month, higher than the estimate of 110,000 and just above the upwardly revised 144,000 in May. Currently, the Dow Jones is up over 300 points. The S&P 500 is up just under 43 points. The NASDAQ is up 179 points, and the 2-year yield is up nearly 10 basis points, and the 10-year yield is up just over half a basis point as we speak right now. Cloud monitoring provider Datadog is up 12% after S&P Global added it to the S&P 500 index, effective before trading starts July 9th. The move will force passive index funds to buy Datadog shares to reflect the composition of the underlying benchmark index. Online travel review company TripAdvisor is up nearly 18% following a Wall Street Journal report that activist investor Starboard took a 9% stake. And finally, online brokerage Robinhood is down 4%, giving back some of its 6% rally yesterday. Robinhood was seen as a leading candidate to replace Juniper Networks in the S&P 500, and privately held OpenAI is pushing back against Robinhood's recent announcement of tokenized shares in the artificial intelligence startup. I am Ben Kitchen, and that is Wall Street Watch.
I think you can pretty much see TripAdvisor's world headquarters from one of our windows in this office.
Yeah, right off the
it's right there.
highway.
I don't ever see anybody there, but
No, it's true.
Visible.
I've never seen anyone there, even before COVID. And where do they park?
Precisely what do you do here?
Is that an actual bill? It's like a Potemkin village out there.
Big news from Ben's. Look here, the market reaction to this jobs report this morning is what I'm seeing is a sigh of relief. Equity markets up, expectations for a rate cut down, therefore yields up as well. Those that were betting on an immediate Fed rate cut have just been wiped out on that overall bet. A 9 basis point move in 2-year treasuries is a fairly significant one-day move. That indicates something to me. At this stage, the chances of a rate cut at that July 30th meeting are now quite low at about 6%. The odds of a 0.25% rate cut at the September meeting are gaining steam here. We're still at about 70% likelihood on that September rate cut compared to where we were. But to be fair, a day ago, before this jobs report, there was a 93% chance of rates being lower by that September meeting. So this definitely reverses all that. And again, good data.
Yeah.
Full stop. I wanted to do a full stop there. It's good data. It indicates a positive thing for the state of the U.S. economy. It indicates a positive thing for demand for labor. What it doesn't help you with is getting rates lower if you are betting on that and looking for that, and it definitely justifies what the Federal Reserve.
But this
and
is
Jay
again a
Powell's been
really
talking
good
about.
thing. It's like you don't lament not having back pain, so you could pop some Oxy. Like this is a good. I'm sorry.
That's a good analogy, Mark.
I think it was better than liking hospital food, so being disappointed you didn't have a serious illness or something. So this is a good thing. Now, some people online are nitpicking, just like they did under the last president. Well, it was mostly government hiring.
Who cares?
A job is a job. There are other potential weaknesses. Wage growth slowed, but wage growth has been pretty erratic. I think you're being unreasonably nitpicking if you look at anything other than sort of the top line results. Those are the things that tend to go into our big picture forecasting models anyway. Unemployment is historically low. Job growth is strong enough to maintain that, and then some apparently. Last month I'm mixing surveys there, but you get the larger point.
And to be clear, I mean, you might be able to nitpick on federal government employment and say, that's
down.
That's big government, but that's down. The uptick in employment we saw was at the state level, at teachers, cops, those types of jobs. And I don't know that you can nitpick and say, oh, well, that's not good employment for the economy. That's employment.
No, it is. These are lagging indicators, both the payroll and the unemployment rate, and all the other components
best
of
we
the
got.
surveys. Yeah, they're a good snapshot of the health of the economy. Maybe 2 or 3 months ago.
This morning, in the wee hours of the morning, the House voted to bring the Big Beautiful Bill Act at least to a vote. That vote has not yet taken place. We do not think the House is attempting to make a bunch of revisions to this bill, although to be clear, it's not at all clear what's going to happen next. Johnson can only lose, I think, 3 votes on this bill to get it through. It would be immensely surprising to me if it did not pass in some way, shape, or form. I think the only real question is, can it all get done by the July 4th self-imposed deadline that Republicans have put themselves under? We covered yesterday a bunch of the changes to taxes as part of this. I think the biggest actual changes that I can point to would obviously be the spending cuts on Medicaid and SNAP. It would be the additional tax deduction for those over the age of 65. Other than that, it's mainly a bill that locks in current tax law.
I don't think it's going to change. Look, there's a lot of hysterics on both sides about the deficits and the debt, and many of those concerns are very well placed. But this
and also many of them are disingenuous. But yes.
Yes. Oh yeah. Totally hypocritical. Obscenely hypocritical.
Democrats are.
Mike, I've given up on that. I'm
crying wolf about the deficit.
I've given up on anybody ever cutting spending meaningfully. I'm glad I was alive in the 1990s and grown up, and I got to see it. It's like seeing Halley's Comet, which I also saw in '86. So I may never see either one of those two things again. I'm going to leave it to you two and posterity to hope for that. I've given up on hoping for, on meaningful cuts. The deficit, all else equal, won't get that much bigger under this bill. People who are accusing them of trickery are pointing out that it assumes that the previous tax cuts didn't happen. That the real dire. I'm misphrasing that a little bit. I'm not even going to correct it because I don't care at this point. Deficits will be a little bit, not much worse. The debt is the real problem. If you want an analogy, the debt is like your cholesterol level. Your doctor says you're at 250. If you know what that number means, we all know what it means. That would be high. Is it going to kill me this year, doc? Well, possibly, but probably not. The debt is sort of the same thing. At some point, there's going to be a reckoning. It's going to push interest rates up. Is it going to happen quickly, slowly? I really don't know. But nothing imminent, probably, though it could be. We just don't know, Mike. I don't see any reason for anybody to panic more about the deficit and debt this week as opposed to last week. So that segment of the commentariat can calm down. Those claiming that these sets of tax changes will somehow increase economic growth are equally, those assertions are equally misplaced. It will do nothing for the trend in growth, which is all we should really care about. So, Mike, it'll make the situation slightly worse, the debt situation, but it's not going to really change anything else. It might bring our reckoning up, 6 or 12 months. So doomsday, you can move that up, fiscal doomsday, but only by like a year.
In the words of Ernest Hemingway, and a lot of people have been quoting him recently when describing the U.S. fiscal situation, he uses the phrase, it happens slowly and then all at once when describing the process of going personally bankrupt. Maybe that's how it all plays out.
There could be a sudden stop. There are some, it's called, the international economists call it a sudden stop because it's happened elsewhere. Greece, for example, suddenly creditors say, you're not a bankable credit. I will not lend to you at any interest rate. Unlikely that would happen.
Tend to agree.
To the United States, I see more of a sort of this unfolding gradually in terms of rising interest rates and a permanent a rise in the level of inflation. We can adjust to those things probably, so it'll mean slower growth and lower standards of living. But you won't be conscious of the alternative. It's like the other universe where I'm taller and more. And handsome, and I have more hair, and I don't know that guy. I can't lament it. We'll never know what we left behind.
All right, so far I've got an OxyContin analogy
and a Doctor Strange
multiverse. We have to take a break now. Go out when you're on top.
Quick
break.
That soak
when we come back, we're talking trade deals in Vietnam in particular next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence continues to evolve and can now play a role in financial planning. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There's a lot that's still unknown about the benefits of utilizing artificial intelligence, but understanding it may help you make smarter decisions about how to manage your retirement plan. We have a new guide called AI and Your Financial Plan. In it, we'll take a look at what AI does, how it works, and what risks are associated with using it. The guide is designed to provide you with a clearer picture of the tools available as you evaluate your overall strategy. If you'd like to learn more about how AI can have an effect on your financial planning, call us today at 800-393-4001. That number's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Because we just didn't have enough going on this week in a shortened trading week with multiple jobs reports and a giant tax bill that's trying to get passed, President Trump's team announced a new deal with Vietnam on trade just yesterday. So we've had a bit more time to digest that. And I think... Look, U.S. trade with Vietnam is fairly significant, especially for some big household brands that we're all familiar with, Nike, Lululemon, Gap, to name just a few of them. So it is a fairly significant trade partner, especially in those specific areas. It's also a country that I think the word accused is appropriate here, has been accused of kind of facilitating Chinese-made goods to go through that country and then back to the United States and vice versa. So it gets a lot of attention for a number of those different reasons. The deal that has been announced here is for a 0% tariff rate on American goods going into Vietnam, with a 20% tariff rate on any Vietnamese-made goods going into the United States, as well as some supplemental rates on Chinese goods that get rerouted through Vietnam, which is, I don't know how you track that, given the only reason you would put them through Vietnam is to avoid tariffs in the first place. It seems to be that it would be pretty difficult to enforce some of those details, but nonetheless, attempting to impose a higher rate there. I think the only relevant question, well, that's not true. There's a few relevant questions to me on this. One, I believe from my reading, and I'm getting a little bit out over my skis here, so I don't want anyone to take this one to the bank, but I believe that the rules the president is using, the White House is using right now to impose these tariffs, are the same ones that are being looked at in terms of the legal authority and probably land in the Supreme Court eventually to determine, hey, does the president have the authority under these emergency powers to impose tariffs on Vietnam, on China? And so depending on how that ruling goes, there's a path where either Congress needs to ratify this deal, a new justification needs to be come up with, or I think there's even, well, I consider it to be a low probability scenario, a scenario where this 20% tariff rate goes away, things all get blown up again, and possibly even all the tariffs collected on Vietnam get reimbursed to the U.S. Importers of those goods. I consider that to be low probability, but we are still working through, hey, does the president even have the legal authority here to make these determinant calls on tariff rates on China, on Vietnam, on all these countries? So more to come on that.
Well, I just want to point out, this is a tax increase on Americans. They'll pass some of these tariffs through, and a tax cut presumably for Vietnamese consumers.
Explain why.
Tariffs are a tax.
Yeah.
I know the administration, for some reason, insists on calling them other things. I don't know why you would. The whole point is to tax foreign goods to make them relatively less competitive and shift manufacturing here. Or alternatively, to tax foreign goods to raise revenue. The president specifically keeps saying we're going to charge China, we're going to charge Vietnam. That's not how tariffs work. I'm not sure if he's had it explained to him and he just chooses to ignore it because he thinks it's better to frame it this way.
Well, but my answer, Mark, would be that a core tenet of MAGA in the first place, you go listen to interviews with Steve Bannon and others, the entirety of the idea here, one of the core tenets is we want to lessen free trade and build giant barriers to build up the U.S. manufacturing base. And the word taxes are immensely unpopular. So
they just call
it's
it
a rebranding.
Tariffs. That is a legitimate point of view. We can argue about it.
Sure.
All the evidence suggests that makes people worse, not better off.
Yep.
We can have a level-headed discussion about that.
Obfuscating works better than level-headed discussions.
I don't think it's not. I don't think it's helpful. I don't think it's advancing their cause. So this is a tax increase. The hope is it will reduce consumption of Vietnamese goods, so the production of them is shifted here.
We ain't making Nike shoes with a 20%.
And even if
tariff.
we were that to happen, you wouldn't be raising revenue from tariffs. So that is in tension with the other stated purpose, which is to raise revenue. I still don't understand what the objective of all these machinations is.
Agreed.
They're doing a lot of dancing around and ending up in the same place we were at 3 months ago. And the result is higher uncertainty, which may be impacting the dollar and therefore capital markets, something I think we're going to talk about.
Where I land on all this, and Mark, I agree with you entirely. I'm not in favor of tariffs. I don't think they're going to be a good tool for making... I don't think it's going to make America better, I guess would be my main point here. I think what you can take away from this is Vietnam is one of the first deals that has been made. We are seeing where those tariff rates land. It gives us some form of benchmark for where the rest of these negotiations go. For example, it's very unlikely, for instance, that China's tariff rate is going to go down below 20% in my view now. Likewise, for India and other countries, I see it unlikely as the Chinese tariff rate of 55% is going to go to zero. I don't think so based on what we're seeing now. And so we're starting to get this framework for how trade develops. I agree with you. I would rather have free trade. We're not going to get that.
Well, it's not so much that as how it's being framed. Do these guys even understand what tariffs are, and do they understand what they want from them? If they don't get those two things, and given their public statements, they don't seem to understand what a tariff, the Commerce Secretary doesn't seem to understand what a tariff is. Or if he does get it, he's willfully misrepresenting it. Either one of those possibilities is a little bit disturbing. If these guys don't get what they're doing and don't have any idea how they're going to measure success, let's measure it using the trade deficit. And we can look at Trump 1 track record for proof of how that works. Trade deficit went up, not down. We didn't gain manufacturing jobs. You can expect that to happen again because of the way these things work.
Summer's here in New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Tesla's global vehicle deliveries plunged This is just too funny. Global vehicle sales dropped 13.5% as the EV maker struggles to reverse months of declining sales. The final quarterly tally of 384,000 Tesla deliveries missed all expectations of 387,000 deliveries. And quite honestly, I don't know that Elon Musk cares. He is now kind of phrasing the company as not a car company, but we're more of an AI and robo-taxi company, which is great if you can pull it off. But from everything that I understand, 100% of your earnings currently comes from selling cars. So you got a lot to prove on that other business model if it's going to drive the stock forward. Let's take a quick break. When we come back, we're going to have a full market recap, take a look at that jobs report again, and get an update on the big, beautiful Bill Act working its way through the House. That's next on the Financial Exchange.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and Your Financial Plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. out. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange as all of you make your way across the country to your July 4th destination. We've got markets in strongly positive territory on the back of a better than expected jobs report. We've got interest rates up slightly on expectation or falling expectations of a rate cut. And clocking in on a few drives here. What do we want to see? Let's see. Boston to Chatham drive time right now looking like 2 hours and 53 minutes as we head into the weekend. How about...
Well, we're really going local this morning, huh?
We are, yeah. I want to know what it would take me to get to Lake Winnipesaukee if I needed to leave from Boston right now.
And for those joining us
well.
on Sirius, that's a place in New Hampshire.
Yeah, it is. Not bad. 2 hours and 8 minutes if I want to go to Winnipesaukee, so I'll take it. Any other drive times you want to check in on? Down to Narragansett, Mark?
From here to Rentham, Massachusetts.
To hit the outlets.
No, for no particular reason.
That's how Marc Fandetti celebrates his shopping at Gap on the news of the Vietnam tariff announcements.
Lived there 20 years, been to the outlets like twice, but yeah, okay.
Let's start off with a look at this jobs report again that we got at 8:30 a.m. this morning. It's a Thursday jobs report. Usually comes the first Friday of every month. Obviously, there's something going on tomorrow that's disrupting that. Very disappointed that markets are closed and that I won't be able to come in here on a Friday, but we'll all live. Markets closed today at 1 p.m. At 8:30 this morning, we had a jobs report that reported 147,000 jobs created in the month of June, according to the that comes from the Establishment Survey. Wow, I'm drawing a blank there
Keep
for
going.
a moment. The
You're gonna get
Establishment Survey, which surveys a number of businesses, indicated job creation of 147,000, which was well above expectations, which were around 100,000. The unemployment rate, which had come in at 4.2% over the last three readings, bumped down to 4.1%. And overall, what you can take away from this report is an economy that is defying, I think, all expectations and remaining quite resilient, at least when it comes to the labor market in this moment.
There were some concerns about labor market softening. The drumbeat was getting louder over the past few weeks. It might be the case, though, the labor market is just normalizing. The unemployment rate went from 14% to under 4%, so historically very high, the highest. The rate reached during COVID was the highest since the Great Depression. The lows reached post-COVID following several rounds of stimulus, following exceptional emergency action by the Federal Reserve, was the lowest, more or less, that it had ever reached. A couple of exceptions, 1960s, late 1990s, so in very good company. All measures now, fast-forwarding ahead to today, point to a stable and strong labor market. Anything in the fours, Mike, or in the fives for that matter, providing that that's not a way station to something much higher, is very good for unemployment. It probably, that something in the fours, something in the low fives is probably close to what you might call full employment, what you might call a natural rate, the rate that's not pushing inflation up. Think of it as the economy's speed limit. So the household survey, as you've already pointed out, suggests an all clear, as of this snapshot anyway in time, for the labor market. Similarly, the Establishment Survey, even including the adjustment you might want to do in your head for the fact that it's an estimate and we know it's plus or minus roughly 130,000 jobs. In all likelihood, businesses still added jobs last month. Wage growth came in a little bit, which is good news for inflation. And there's really not much to, I don't think, harp on as being negative in this morning's report, as you pointed out.
So in the words of Marc Fandetti, stop complaining, all you college grads. Is that what I'm hearing?
No. Well, yeah, so there is this uncomfortable reality that according to other reports like the job openings, labor turnover survey, so-called JOLTS report, and other more anecdotal sources, the jobs market is in something of a limbo. Not many jobs being shed, thankfully, fewer, particularly for that cohort that you mentioned, recent graduates being added. What's going on there? I don't really know. To tell you the truth, I'm not a labor economist, not my area. There's some interesting speculation. As with many things, we won't truly know what the trend is, either in that segment of the labor market or overall, or for that matter, with respect to the price level and the change in the price level, which we call inflation, and moving up a level still, economic growth. We won't know for some time what's actually going on in the economy right now.
But you can take the good news for what it is today, and investors seem to be doing so on Wall Street.
And the reaction makes sense. It makes perfect sense. Sometimes you can't explain it, and we chalk it up to noise, which is a lazy way of saying we don't get it. But today's reaction, stocks up.
It is, right?
Bond yields.
It's such a lazy way of saying I don't get it.
It's a catch-all category. Yeah. When you don't know, you say it's a miracle. In science, when we don't know, we say, well, I say we like I've never owned a microscope. But you know what I mean. We, as a civilization, we say it's a miracle. That's the category we assign to things we can't explain. Here we call it noise. Today's reactions make sense. Bond yields are up on stronger growth, perhaps, and maybe inflation expectations, maybe the idea that the Fed needs to cut urgently. That idea is the urgency has subsided somewhat, maybe a lot. So it makes sense that rates, especially short-term rates, like Ben Kitchen said in the last hour, are up a lot. Makes perfect sense.
Never once owned a microscope?
I don't think I've ever owned it. Why would I have a microscope? What do you do with yours?
We bought them as a family, and it was the most entertaining way to most entertaining way to look at the kids' head lice was under a giant microscope. Those are fascinating little disgusting.
What are you guys, Amish?
Yeah.
Huh.
Why not?
Oh, actually, if you're Amish, you wouldn't own a microscope.
Correct.
You'd have like a ferret eating them out or something, eating out the lice.
In reaction, Dow Jones
for our
Industrial
Amish listeners running us on Sirius.
Yeah, they're very.
Although they're Amish, they don't have satellite radio.
No.
Yeah, so the heck with them.
Dow Jones Industrial Average up 367 points, 0.8%. S&P 500 up 51 points, 0.8%. Nasdaq closing in on a full percentage point higher, and the Russell 2000 also up a little bit more than 0.8%. In the bond market, as we've been talking about, interest rates moving a bit higher this morning. The yield on the 2-year Treasury yield up nearly 9 basis points to 3.876%. The yield on the 10-year up about 4 to 4.33%. And just because Mark did not like all my Boston-centric drive times, the drive time from Manhattan to the Hamptons currently clocking in at 2 hours and 42 minutes. I have no idea what it usually takes, so irrelevant to me, but just in case you were curious. Quick break. We got trivia here next on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Artificial intelligence continues to evolve and can now play a role in financial planning. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There's a lot that's still unknown about the benefits of utilizing artificial intelligence, but understanding it may help you make smarter decisions about how to manage your retirement plan. We have a new guide called AI and Your Financial Plan. In it, we'll take a look at what AI does, how it works, and what risks are associated with using it. The guide is designed to provide you with a clearer picture of the tools available as you evaluate your overall strategy. If you'd like to learn more about how AI can have an effect on your financial planning, call us today at 800-393-4001. That number's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com. Today is Tom Cruise's 63rd birthday. Tom Cruise's current Mission Impossible movie is the 5th highest grossing film of the year worldwide. Today's question, how many Mission Impossible movies has Tom Cruise made? How many Mission Impossible movies has Tom Cruise made? Be the 4th person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The 4th correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Mark, I actually don't recall where I was reading or listening to it, whether it was a podcast or a news article, but it was from a left-ish leaning source, and it was speaking specifically about this tax bill that is being moved through and speaking about deficits and the concerns that are being raised about deficits in particular. And one thing that they narrowed in on that I thought was maybe just a bit of a miscategorization was the move in the dollar this year. So as we've reported on, the dollar is moved down about 10% so far this year in value compared to a basket of other
currencies. So it takes more dollars
currencies
to buy a yen or a euro or a Swedish krona or whatever. It's not
devalued a
right?
bit,
makes
called, right? Makes U.S. manufactured goods look more attractive overseas. if you're traveling overseas or owning dollars, you own a few less of them. And
they go less far,
The point was made that, hey, there's already pressure on the dollar, and this devaluing is happening at a time when U.S. interest rates are by and large higher than elsewhere in the world.
Right.
And already there's pressure on the dollar. If you lump on a whole bunch of new additional debt on top of that, what does it spell for the state of the dollar? And I felt that was all factually accurate, but insinuated that the fall in the dollar this year was already due to deficit concerns. And I have to say, I'm not really sure I agree there.
So the dollar and all those other currencies we talked about, they are assets. They're traded every day. In fact, it's the biggest capital market in the world. I say this because I didn't know this. Like as a student, it didn't occur to me that currencies get traded. What does that even mean?
Right.
People, you buy dollars if you are a Japanese business or their central bank. You can hold them as dollars. More likely, you hold them as U.S. assets like treasuries. So dollars have many uses here, obviously, and abroad. Why would the dollar fall? Well, there's less demand for it. Maybe it's because U.S. interest rates are coming down. That's the typical explanation. And you're right, Mike. U.S. interest rates are still higher than, and I'm going to just use the long-term rate here. When I say interest rates, I'm thinking of the, say, 10-year Treasury. The 10-year Treasury equivalent is much lower in other countries. Not the U.K. necessarily, but Germany, Japan certainly. Italy, maybe about the same. But it's on average, we've got higher interest rates than other countries. It's not so much that matters, I don't think, as the expected future difference in interest rates. And up until, well, really, at 8:29 this morning, people were expecting U.S. interest rates to come down, maybe quickly. So it's natural to expect if that differential between U.S. and foreign interest rates were. And by the way, I'm doing something else here that I should explain. I'm equating what the Fed does when I say the Fed will ease policy with what happens in longer-term interest rates.
Doesn't always happen.
Certain. No, in fact, as often as not, it does not happen.
Right.
Fed cuts rates, long-term interest rates go up because inflation expectations go up or growth expectations go up. So people were probably misattributing the dollar's decline to worries about erratic trade policy, worries about the U.S. deficit ballooning even more rapidly than previously expected. The explanation's a lot more mundane than that. It's that interest rates here were expected to come down by more than they were expected to come down elsewhere.
Right.
That explains everything, and it also explains what's happening today. If you have a theory, it's got to explain not just what's happening right now, but what's happened even if it wasn't consistent with what's happening right now at previous points in time. And I think it's just a matter of interest rate differentials, Mike.
It can be difficult to parse out because the theory of the dollar devaluing, foreign buyers of U.S. assets moving away from them due to deficit concerns, growth concerns, tariff concerns, to me is a sound theory that could eventually take place.
Sure, yeah.
Right? Like, you can paint a picture, right? If the U.S. keeps running up such high debt bills, they won't be able to pay it back. We're not going to lend them money at 4% interest rates or whatever you're lending the U.S. at those rates because you're worried that they're going to have to devalue the currency in order to print the money to pay the interest on the debt and pay back those loans.
Yeah, they won't call it a devaluation. That's like when a government deliberately wants its currency to be cheaper.
Right.
Another reason a foreign government might own dollars. They use dollars to manipulate the value of their own currency. We don't do that, at least not anymore. Just a technical point since we're on the subject, and it's a complicated subject.
So how
anyway.
how that whole house of cards could come crashing down, I think, is a relatively sound theory that could someday take place. But you have to kind of resist temptation to believe it at all times.
There's never one. Single explanations are usually
useless.
They could be right, but they're probably wrong. It's very easy to. They're convenient though. You just have to be willing to question what you thought explained events yesterday today. Because data's constantly coming in and markets are shifting, and if you're not questioning what you thought yesterday, you're not doing a very good job.
CEOs publicly stating what they were previously kind of skirting around the edges on, but coming out and saying it a little bit more when it comes to artificial intelligence these days. Wall Street Journal reporting this, that, CEOs are being much more public about their expectations and goals for artificial intelligence than they were previously, and those goals are pretty clear. We want to cut the cost of our labor by shrinking headcount across the board. Here's what we have seen so far from a few different leaders. Chief Executive Jim Farley said in an interview, quote, artificial intelligence is going to replace literally half of all white-collar workers in the United States. We had other projections from Marion Lake, the CEO of J.P. Morgan Chase's consumer and community business, telling investors in May that she could see its operations headcount falling by 10% in the coming years as the company uses new AI tools. And Amazon CEO Andy Jassy wrote in a note to employees back in June that he expected the company's overall corporate workforce to be smaller in the coming years because of the once-in-a-lifetime AI technology. So I think the Wall Street Journal is correct in one thing, that CEOs are presenting this more frequently to primarily investors about the future state of their companies. I don't really believe that they're right, that these CEOs are correct. I think more than likely they are saying these things in order to get attention from investors and paint a pretty picture of their future earnings, of what all of this stuff looks like. Quite honestly, I think if you were to pin me down or pin the CEO of any of these major companies down on what their expectations for artificial intelligence really are, it would be to make their employees that exist today more efficient with one goal in mind, Mark. It's to grow. Right? I mean, if you are a CEO of a publicly traded company, your goal is to grow revenue, grow profits, and make your company larger. If you can utilize artificial intelligence, if your net result here is that you have eliminated half of your employees because of artificial intelligence, I view that as a failure. That means that you have not grown.
Mike, it might wipe out Ford's jobs at Ford, but it will create jobs elsewhere. You know what else wiped out a lot of jobs? Electricity did.
Yes.
A lot of candle makers lost jobs. There are tons of examples like that. This is textbook progress. Forgive me, I don't mean to be glib about it, but we have to ensure that those who are displaced get retrained. But that's no reason to hold back, and nobody here is suggesting regulating AI to hold back these advances. Just AI, like any technology, and there are probably more potent examples in our history. I mentioned one, steam power is another, for Pete's sake. They push out the frontier of what's possible. There are always disruptions, but on average, we'll be far better off. So it might hurt Ford if they're not properly positioned, but you can't extrapolate to the larger economy from that.
Right. I tend to agree. And again, if the only result of all this is that we have fewer people working in general,
well, that's not
then it's not going to happen. And it's a very ugly picture, not of just the U.S. labor market, but of the companies themselves if they are hollowed out of their employees, because it means they've not found a way to grow off of this technology. Quick break. Full market recap next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets continue to rise today as traders continue to digest this morning's monthly jobs report that came in higher than expected. Non-farm payrolls increased a seasonally adjusted 147,000 for the month, higher than the estimate of 110,000 and just above the upwardly revised 144,000. The Dow Jones is currently up over 336 points, or 0.75%. The S&P 500 is up over 50 points, or 0.82%, and the NASDAQ is up over 207 points, or just over 1%. The 2-year bond is up 8 basis points, and the 10-year is up 4 basis points. Right now, shares of the Silicon Valley chip designers Synopsys and Cadence Design Systems each are rallying over 5%. The U.S. government lifted restrictions on exporting chip design software to China, according to announcements from companies in the industry. Drone maker Kratos Defense and Security Solutions is up 2.7% after RBC Capital Markets reiterated an outperform investment opinion. The firm raised its 12-month price target on Kratos, believing the small-cap defense tech sector will continue to outperform. Krispy Kreme said this morning that its current CFO is leaving for another job, with international president Raphael Duvivier set to take the job over next week. The donut maker reported declining sales in May and recently ended its partnership with McDonald's amid profitability concerns. Currently, Krispy Kreme is about 4% off. I am Ben Kitchen, and that is Wall Street Watch. Today's trivia question was, how many Mission Impossible movies has Tom Cruise made? Your correct answer would be 8. He is currently on his 8th Mission Impossible movie. Today's winner is Susan in Bedford, New Hampshire. She'll be taking home a Financial Exchange Show t-shirt. We will resume trivia next week.
Do you guys remember the height of the Krispy Kreme craze? I don't remember how old I was, but I remember there's a local shop owner who would drive something like 2 hours every morning to go to a Krispy Kreme across state lines, buy a bunch of Krispy Kremes, and then resell them at a markup to the local residents. And it was a line out the door every time.
Yeah,
that lasted like a week and a half.
They all had heart attacks. Then the phase fad
disappeared. Yeah.
Fad phase.
There you go.
Faded.
Mark, we have a piece from MarketWatch today on 401ks, and I find it interesting because we have been talking a lot about looming changes to 401k plans that are being tossed out there. One that came up, I think, last year was the inclusion of new annuity products in 401k plans. And another is the discussion, partly led by BlackRock, but others as well, of including private equity and private credit in 401k plans. As with anything else, I can't describe any of these things as universally good or bad.
No.
I don't think it's appropriate to do so. But I do think that you can definitively say that 401ks are on the cusp of getting more complicated than they have been previously.
Yeah, they're trying to make them. The overall theme of the past really 25 years, or since the Pension Protection Act of 2006 anyway, is to the overall effort has been toward making 401ks more automatic and more pension-like.
Mm-hmm.
Unlike
examples of
306,
that would be automatic enrollment, automatic increases.
Those things existed pre-2006, but they hadn't yet received the blessing, the categorical blessing of the Department of Labor, to the point where an employer knew they wouldn't get sued if they offered them.
Right.
Believe it or not, it was controversial before that.
Yeah.
Or at least legally questionable to default enroll somebody into a plan and default them, that is, to do it without asking them but giving them the chance to object. If they didn't, they got put into it. Default them into an investment that put their money in stocks, which is what a target date fund does, of course, and balance type
get why that
funds
was
do.
controversial.
Sure, you could lose money, and there were suits prior to 06. After the clarity that Pension Protection Act provided, the so-called target date fund industry blossomed. More recently, though it's not exactly a new phenomenon, in the effort again to make 401ks more pension-like, offer an annuity distribution option. Most big plans have for a very long time. Few people take advantage of it, though. Maybe because of the mixed feelings people tend to have about annuities, maybe for other reasons, but
it's a taboo word. It's a scary word for people.
And now we're moving. Yeah, you would know, right? There are like with any financial tool, there are good uses and there are misuses, and the new phase seems to be, or maybe abuses. You're protected against that to a degree in a 401k plan because your employer is a fiduciary. The legal standard is for decision making there is very, very high. The next phase appears to be offering private market investments into 401k plans. Pension plans have used them for over 30 years. That's private equity, private credit.
It is an important caveat that I don't think people recognize, that their employer has a fiduciary obligation when it comes to their employees and their 401ks.
Under federal law.
So there are serious ramifications if they do intentionally adverse things.
Not just that, they have to be engaged, Mike. Like as a fiduciary, you have to exercise the same degree of care that a reasonably prudent expert would. You can't just sort of put it in place and hope for the best because they're self-directed. You have to ensure that outcomes conform within a broad range to what's deemed appropriate.
That having been said, there is a growing push, I think, for, I don't know if I would call it deregulation, but inclusion of a lot more complexity when it comes to these retirement plans. We've already seen it through the introduction of Roth accounts decades ago, but those have become much more prominent. I think they are a great thing, but it's complex. The target date fund inclusion, I think a great improvement on where the 401k has gone over years, but complicated and room for error if you start including annuities and then private equity allocations within target date funds. Added complexity that potentially could be a great thing for investors that know how to use it and know how to vet it and look through it, but large potential pitfalls as well, I think, when it comes to all of this. I would say the traditional versus Roth question is the one that I most frequently see people making mistakes on, quite frankly. And there is no fiduciary obligation for the 401k provider, to my knowledge, to tell you should you be doing one versus the other.
No, indeed, they probably can't unless they offer advice and you pay for it and it's monitored.
Correct. So there are a number of these choices that, the employer has this fiduciary obligation to you. There are a number of them where you're on your own, you need to figure this stuff out. If you have a 401k account and you don't feel as though you have a really firm grasp on some of these things that we've discussed, right? What's the appropriate amount for me to be putting in? How much should I be contributing to traditional versus Roth? What's the difference? How am I going to be taxed when they come out down the road? What if they do start including some sort of pension-like annuity within my plan? Should I or should I not participate in it? How will it affect my financial future? These are complicated questions. I recognize they're complicated. That's why we exist here at Armstrong, is to help you answer those complicated questions and build it into your retirement strategy. Give us a ring at 800-393-4001. I know you're all sitting in traffic just like I'm about to be. Give us a ring at 800. Well, don't whip out your phone and do it, but call us at 800-393-4001. You can also, when you're done driving, go to armstrongadvisory.com and just book a time for us to call you back at your convenience. But once again, it's the Armstrong Advisory Group. The number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I went a little bit long there, and I don't want to keep him waiting. Paul LaMonica is going to be joining us next from Barron's, talking to us about trading platform Robinhood. That's next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Joining us now is Paul LaMonica from Barron's to talk to us about Robinhood. Paul, important first question. How long does it usually take to drive from Manhattan to the Hamptons?
No
idea.
I think it.
Usually take your helicopter?
Yeah, I take the helicopter. No, I grew up on Long Island near beaches that you didn't need as much money to hang out in. So I never really went out to the Hamptons.
That's
But,
fair.
Taking the jitney, it's like couple hours.
Okay, fair enough. We were looking at traffic patterns ahead of the holiday, and I had no benchmark for what that would normally take. We're speaking today about Robinhood, Paul, and you have a really interesting piece here on their dominance and their recent stock success as well. But I have to be honest, if I was sitting here back in 2020, when I was sitting here back in 2020 and 2021, and looking at the retail investor landscape back then, when you had Roaring Kitty dominating the news, when you had Dave Portnoy saying he was a better investor than Warren Buffett, and you had all these meme stocks and SPACs, my guess at that time was you're going to have a whole bunch of investors get burnt, which they did, and they're going to lose interest, and we're not going to continue to see this same retail investor interest and dominance with the dumb money kind of leading things when it comes to the markets in 2025. We've seen some of that pullback, but I can't say that we've seen it entirely reverse the trend that we have been on recently. What's your take overall? Am I misreading it?
No, I mean, I think what's fascinating is that in 2020, 2021, with everyone maybe sitting at home and, being bored with what was going on with the pandemic, there was this sense that, the retail investor was in some respects maybe trying to lord one over on institutional investors, and they were buying stocks with more questionable fundamentals like GameStop, like AMC. And there was this sort of sense of let's really show the quote unquote big money, smart money institutional investors that we can't be bullied, we can't be pushed around. I think what's happening in the past couple of years is that retail investors have maybe grown up a little bit, and I don't think they're chasing as much these speculative companies. They're, riding the wave that the institutions are, which are the Mag 7, the NVIDIAs of the world, and Meta and Microsoft, all these AI leaders. And those are stocks that have done quite well. And, I think Robinhood has benefited from the broader market rebound. Even this year, of course, we had such a big sell-off in April around Liberation Day, and it was kind of a blink and you missed it sort of moment, because now we're back at all-time highs on almost all the major indexes. And I think retail investors haven't been sitting on the sidelines. They've been leading the charge.
To a point you made earlier, I don't think there was a sense that retail investors were trying to pull one over on big hedge funds and the smart money. It was a pretty explicit stated goal of some of the retail investors that were out there in 2021. Some of the comments
on Reddit. Yeah, definitely.
When we take a look at Robinhood, I saw the story published just the other day about now, I frankly don't even know what this means, which is why I'm asking you. Tokenizing investments in U.S. stocks and indices for foreign owners or for foreign investors investing in U.S. markets. I don't even understand fully what that means to do something like that, but is the overall move here just, hey, what are new ways that we can appeal to investors that have an interest in the crypto industry?
Yeah, that basically is it. It is a bit opaque, and there's been some controversy too, because the tokenization aspect, Robinhood is claiming that they will be able to sell these tokens in private companies like SpaceX and OpenAI that could be like an equity investment. And OpenAI has shot back and said, we have no involvement in this. We do not endorse it. We do not approve it. And then you had Robinhood CEO Vlad Tenev going on, X, Twitter, kind of walking things back a little bit, saying, yes, these are not real equity investments. We get that. All that being said, I think Robinhood clearly is a company that recognizes that, there's retail demand for not just traditional stocks, but also Bitcoin and other cryptos, and as well as some of these more esoteric, tokens that are out there as well. And, Robinhood is trying to, gain, exposure in that market. And the stock, did take a nice pop earlier this week on that announcement. It's down a little bit today. I think there was some speculation they would get into the S&P 500, but they didn't. Datadog was chosen to be the replacement company, if you will, for Juniper Networks, which just got bought by Hewlett Packard Enterprise. So Robinhood stock is coming down a little bit today, and I have a piece up on Barron's right now about why that might be short-sighted, because Robinhood maybe didn't get in today, but they're probably going to get in eventually. They're too big to ignore. Companies like Tesla and Coinbase, they also had to wait a little bit longer than retail investors expected, but they eventually got in.
Speaking of Tesla, I see some points of comparison here, right? I mean, this is a obviously growing company that's trading at quite a premium. Ultimately, though, they are just a brokerage platform. There are other publicly traded, much larger brokerage platforms out there like Charles Schwab and others. What is the premium that people are paying for this stock, and what's the reasoning behind it in your mind?
Yeah, it is a difficult sort of argument to make that a company like Robinhood deserves that much of a premium to, say, Schwab or Morgan Stanley, which owns E-Trade. I think that the argument is that because of demographics, you're going to continue to see this market share shift to companies like Robinhood, maybe to a lesser extent, a company like eToro, and companies like Coinbase and Galaxy for crypto. That we are in a mobile first world, and that's where investors want to be accessing their money. So if you believe that there are these demographic shifts that will continue to take place, then inevitably you're going to see growth further slow for companies like Schwab and Morgan Stanley. Of course, Morgan Stanley is a lot more diversified and has huge investment banking business and asset management business as well. But a company like Schwab, I think, there are going to be continued questions about where it fits in the retail landscape going forward. But, again, they did buy TD Ameritrade, so that helps them a lot, I think, as well.
Paul LaMonica from Barron's joining us today to talk about Robinhood and the continued trends since 2020 in markets with retail investors. Paul, thanks so much for joining us. Appreciate it, and have a great 4th.
Thanks a lot. Same to you guys. Have a good long weekend.
AAA reporting to us the best and worst times to travel around the holiday. If you're making your moves today around New England, the absolute worst time to be on the road is between 2 and 6 p.m., so beware. Tomorrow, your worst timing, 12 to 7 p.m., and Saturday, anytime between 11 and 5. Try and avoid the roadways. That's all the time we have for this week on the Financial Exchange. Markets are open and strongly in positive territory as we close out the week. We'll be right back at it on Monday, folks. Have a great July 4th.